So today what you are going to learn is you're going to understand that how with just two simple steps or two basic ingredients you can understand technical analysis, or with two things from the fundamental analysis point. If you're able to learn these 2 points, it's going to get easy for you to enter the stock market, to learn the stock markets, to explore, to invest on your own without being dependent on anybody. So allow me to take you through this short session where I'll be explaining about these couple of things which will help you start your investing journey in the stock market. So first and foremost, what we need to understand is that let's understand the basics of stock market. What does it mean when I say I am buying an equity, or when I say that invest in a stock, invest in an equity? What does that exactly mean? In simple language, you're basically investing or buying a stock which is giving you a portion of the ownership of that company. So basically, when I say I buy equity of an XYZ company, I am buying an ownership of that company, which means I'm an owner in that company. So make sure when you're investing in any companies, in any equity, don't buy something that has been recommended and you don't know things about. Would you always not want to have ownership of things that are good, of things that are nice, that have good value? Definitely yes. So remember one thing, when investing in a stock that you want to own, think of it like ownership in a company, which automatically means that the company has to be correct and a good company where you can invest your hard-earned money. What is the most common mistake that investors do when starting investing, or when they start looking at stock markets? The most important point to remember is the common mistake that people do. The common mistake is they only look at recommendations. For example, my broker told me buy this stock. My friend told me buy this stock. Someone else's family friend, he's into stock market, he told me buy this stock. Yes, recommendations do work, but not always, right? Recommendations is because those people feel, or they have some study about a particular stock, or they might have heard from somebody else. So when you talk about recommendations, what's important is you need to be able to have the skill to analyze if these recommendations are good. So once you understand how to analyze them, you are in a better position to scrutinize and to make sure that the recommendation that's come to you has to be verified by you. That is going to be your role as an investor who invests your own hard-earned money. So let me give an example. I'm sure most of you have bought a car or a bike at some point of time. When you buy a car or a bike, the first thing you do is you research. You will go to 3-4 different companies. You will check out 3-4 different models. You will compare their price. You will compare their mileage, the model, the size, the features. You will also go up to an extent where you want to consider what kind of a resale will I get when I sell this car. So when we are comfortable doing so much of research for a car, why not the same for the investment of our hard-earned money? I'm sure with these questions, you have started thinking as to, yes, I need to understand how to start investing in the stock markets. So allow me to share a few ideas that can help you analyze these stock market investment plans. You'll be able to analyze with these understanding, these ideas, if a stock is good for you, it can be a good investment. And I'll also share some examples as to how you can think. So allow me to explain to you that there are normally two kinds of analysis that you can study, because to analyze or to be able to understand what's happening, you have to have some kind of education or some kind of knowledge or some kind of skill. The two skills available in the market today are technical analysis and fundamental analysis. Now, it depends on what you want to learn, but just for starters, You can decide to learn either, that's perfectly fine. But just for starters, I'd like to give you two aspects of each one of them. So let's suppose you're going to focus on the technical analysis part of it. Then there are two important aspects that you need to begin with. There are n number of aspects you can work on, but there are two aspects that you can start working on. First is you must be able to analyze what is a trending market. What kind of a trend is there in the market? Is it an uptrend, a downtrend, a mixed sideways trend? What kind of a trend is happening in the market? Why are trends important? For a simple reason, everyone must have heard this common statement, buy on dips. Buy on dips is a fantastic strategy for an upward trending stock. If a stock is downtrending, buy on dips does not work well at all. So for that, you need to be able to identify a trend. Second thing that you can learn is you can learn how to identify supports and resistances. So supports and resistances, according to me, is one of the most important aspects of technical analysis. Even if you don't understand any of the indicators, any of the signals, anything at all, if you are good with plotting supports and resistances, that is a good enough way to start your journey. Now, definitely, I mean, you need to learn them. Don't just Google them or don't just look at free videos in YouTube, because I'm sure they give you a lot of information, but not the knowledge and the implementation skills you require. So go deeper into it, understand how to identify trends better, identify how you can understand to plot better supports and resistances, which will give you a better idea as to when to buy or when to book profits, or what is a good resistance to wait for. If that resistance breaks out, can that be a good investment? So this gives you a perspective about how technical analysis works, and more importantly, how you can use it. So if you're going to looking at technical analysis, I would highly recommend learn how to analyze trends and learn how to plot supports, resistances. This can be a very nice way to begin your investing journey. Now coming to the second part. The second part basically means the fundamental analysis. So the fundamental analysis is a little more tougher for people to gauge or people to understand. And the reason behind it is that a fundamental analytical skill is more in depth, is more about a little bit of calculations, understanding ratios, and a lot more. It's about studying the sheet, studying the balance sheet, studying the numbers. Yes, it is definitely interesting, little tougher, but it is interesting, and yes, it also works well. So like I told you about two aspects of the technical analysis field or the side of that, I will also be telling you two aspects of the fundamental side. So there is one aspect that a lot of investors look at when they invest, and that is called a PE ratio. So to be honest, what does a PE ratio mean? It basically means you'll have to learn the price to earnings ratio, which is simply called as PE ratio. It's a jargon used as a PE ratio, but it's called price to earnings ratio. This basically helps you compare the stock's current pricing to its earning per share. So a stock's current pricing to its earning per share. Normally, a lower PE ratio suggests that the stock is undervalued. So you must have heard people saying the PE ratio is lower in the stock. That means they feel, or it represents that the stock is undervalued. Apologies, it's undervalued. You can find on different platforms or different websites as to about how the stock. There are also many stock market apps coming up right now. Many stock market websites coming up right now. You will find a lot about PE ratios. You can compare that particular PE ratio of that particular stock with the industry average. So what does an industry average mean? So for example, you must have heard of indexes. So an index can be an average of an index or the industry average that is available there. You need to compare the PE ratio of that particular stock with the industry average and other companies in that industry. For example, if you're looking at a pharma company and you are trying to analyze it with the P ratio understanding, that pharma company P ratio needs to be lower than the other pharma company ratios, because it's the same industry average. Probably if you see that the particular stock is relatively expensive or cheaper, that's what you understand when you compare that. So this is one aspect of how normally a fundamental analyst can analyze in a simple way. But the second one is my favorite. The second one is basically means dividend analysis technique. So what it means is dividend analysis of a particular company that defines if there's regular payment to the shareholders from the profits made. So dividend basically is a payment made to the shareholders to the profit the company is making. If the company is profitable, it definitely rewards the shareholders for being a part of the company, investing their money, because they're owners, they're partners, they own a portion of the company because they're equity holders. So they get rewarded as in form of payment. That's called a dividend. So any company which is giving a consistent and a growing dividend, this is what you need to identify. A company which is giving a consistent and a growing dividend, it indicates that that company is financially stable. So this is the kind of company you would like to invest in, which is financially stable. So now if you look at the history of dividends, you should definitely have a look at one thing, the dividend yield, which means it is the annual dividend divided by the stock price to assess the income potential. So simple calculation or a simple formula is the annual dividend divided by the stock price helps you assess the income potential. Now check the company dividends. You can check the history. Where can you check the history? Financial websites. So there are some websites. One of the websites I use is screeners.com. Screeners.com. So you can definitely look at those websites. They will give you a good history of how regular the dividend is. If preferably you want the company's dividend history to be on the increasing side. So any company with an increasing dividend payout is definitely better than a company which is not doing the same. So you must compare the dividend deal with similar stocks, and then you can clearly identify which is a better performing company. Because if a company is profitable, sharing that profit becomes a part of a good company, a healthy company, which probably can be a part of your investment plan. Along with these two ideas of how to invest, what to learn when you want to begin, you also need to have a very clear capital management understanding about what you're doing. For example, how much are you investing and why are you investing are two questions you need to answer yourself. For example, don't look at this as a game of roll dice where you decide how much and how to do at a roll dice. However, I would highly recommend that look at investing as a journey. For example, you need to be specific as to where do you want to go. For example, if you are looking for an investment to build a small pool of money for investing in a down payment of a car or a down payment of home, which is a bigger amount, it's a big purchase. In that case, you need to plan that investment over time. Or maybe you're just thinking of retiring comfortably. That's a much larger time frame plan. So look at investing as a journey. It's very important to set specific, definable goals that will help your journey in investing. Along with that, you also need to have specifics. You cannot say, I want to invest in equity. You have to be specific. I want to invest 20 lakh rupees for the next 10 years for a down payment for my home. So now this is a very definitive, specific, time-bound plan. This is going to help you achieve that investment target and help you keep motivated in that journey. So that's what you have to look at. As an investor, the most important thing is you must have a long-term perspective. You cannot think short-term. You cannot think today the market is down, I'm not going to be investing, I'm going to remove my investments. You have to have a long-term perspective. You must be able to picture your investments like a tree. A tree will not grow in one day. It will take its time. A good investment is where the foundation is strong and the tree bark is bigger, and then you have branches and leaves coming out of it. So remember one thing, it is essential to look at a larger time frame. Mark my sentence very clearly. When you are investing, you have to think of the big picture, not quick gains. Think of the bigger picture. What's more important is, instead of just trying to time the market, like today the market is short, I will sell, tomorrow it's going up, I'll buy. Instead of timing that, focus on regularly adding a little contribution of money on a regular basis. This is going to help your long-term approach and help your investments grow. So this is something very important, very crucial to remember. It's a long-term game. It is a long-term game. Also think of it like a regular plan that you can keep adding some amount of money on a regular basis, which will help it multiply over time. I'll give an example. Let's say you decide to buy a property in an upcoming area, an upcoming location, upcoming society area. I'm sure when you decide to buy a property and when you actually end up buying one, you do not go and check the price of your property every day. Normally, or a sensible investor will check what's happening around the location. Is the location developing? Are there some good things happening around that location? Is a school coming up? Are sports facilities being built? Is the municipal corporation helping out with the facilities? Is infrastructure developing? Because what happens around this society or the investment is what is going to help your investment grow, is going to help increase the value. However, if someone feels that the society is not doing well, the location is not good, he probably might end up losing the money. So he might want to sell off the property and invest somewhere else. This is exactly what you need to do with your investments. If you're investing in a company, try to find out more information on the technical analysis and the fundamental analysis part as to what is going on with the company. You can always check if there are many fundamental changes happening. Is the company doing well profitably? Is the company making enough money? Is the company giving dividends? All these are signs of a healthy society happening around your property, which helps the value grow. I'm sure what I just said is going to make you think of investments in a very different light. Similarly, if a company is not doing well, you understand that there are some problems with the company, business is going down, profitability is going down, it indicates very clearly that this investment may not do well till a substantial change happens. So an investment needs to be treated correctly. You need to be aware of what's happening around your investment, what the company is doing, how the company is performing. That has to be monitored on a regular basis, because that will help you take a couple of decisions, like, do you want to add more capital in the investment? Do you want to change your investment vessel? Or do you think investment's going great, I can just sit back and wait for it to grow? I am very sure that this session has helped you understand some basic understandings about how you can begin your journey, what are the aspects, what are the skill sets you need to master to be able to make sure that you begin and take that first step, if you have not already taken one, in the journey of stock market investing. I would love to thank all of you for your time right now, and I hope to catch you again for the next webinar where I'll be explaining to you about what exactly is intraday and a short-term trading style. Thank you so much for joining today's webinar. See you soon.